According to the most recent data published by HMRC, there are now over 4,000 ISA millionaires in the UK, with average holdings of over £1.39 million. The top 50 ISA investors are sitting on average pots of £8.5 million, and the top 25 ISAs in the country are worth £11.6 million each on average. Just to put things into perspective, in terms of how quickly someone could have built £11.6 million in their ISA, assuming that you started investing when personal equity plans were introduced in 1987, you would have needed about 20 years to reach £1 million, with total contributions of around £127,000. It would have then taken a further 8 years to reach £5 million on contributions of £215,000, and the £11.6 million figure would have been reached after 34 years on total contributions of £310,000. However, building portfolios this big would have required an 18.9% annualized return, meaning that growth of this kind could have only been achieved through stocks and shares investing. Now, this isn't meant to discourage you, because things are very different now. Someone starting from scratch today could get there quicker due to the annual ISA allowance, which has been frozen at £20,000 per year since 2017. So if you're able to max out the current allowance into a stocks and shares ISA, you could reasonably expect to reach your first million in around 25 years time, assuming annualized returns of only 5% after fees. But how have these people done it? What have they invested in, and are there any tips and tricks that we can apply to replicate their success? Luckily, brokers like Hargreaves Lansdown, AJ Bell, and Interactive Investor have published their own ISA Millionaire reports, which include tips for investors, investment strategies, as well as what these millionaires have actually invested in to become millionaires. For instance, Interactive Investor says it has over 1,000 ISA millionaires on its platform. Over at Hargreaves Lansdown, it has 813 ISA millionaires on its platform, up from 573 last year. And the investment platform AJ Bell has also seen a rise in its number of ISA millionaires, with an increase of 119% over the past year. So let's go through each provider's data in more detail to see what specific funds and stocks they buy, and whether we can learn anything from their strategies that we can implement for ourselves. So starting with Hargreaves Lansdown, they currently have 813 ISA millionaires on their platform. They vary widely in age, with an average age of 75. The youngest is 37, while the oldest is an impressive 100. They consistently invest as much as possible of their allowance, and in most cases they do it early in the tax year. In the most recent tax year, for example, almost a third invested the full allowance within the first month, and more than half had done it in the first 3 months. Interestingly, around 2/3 didn't trade their portfolio at all in the previous tax year, showing a focus on long-term stability and putting in practice the rule of not tinkering with your investments. Of course, not everyone can lay their hands on £20,000 to invest every year, but the principle still works. Invest what you can afford as soon as you can afford to. Now, what do they actually invest in? Unfortunately, we don't have access to the specific asset allocation, but from the data provided, we can see that the focus seems to be on funds rather than individual stocks, which shows that the typical ISA millionaire doesn't take big risks. There are 3 funds investing mainly in the UK in the top 10 fund holdings, but there are also 4 global funds and 1 focused on Asia. We can also see a few income funds here, because as you get older, you often tend to switch to more income-paying investments. However, there is also room in these larger portfolios for some specialist funds, and some focusing on unloved companies that the manager expects to come back into favor. ISA millionaires have shown some enthusiasm for responsible investing too. The idea here is that when you have a larger portfolio, you also have more scope to add specialist funds into the mix. But the takeaway from this list is that these millionaires are geographically diversified, with their eggs in lots of different baskets. When it comes to individual shares, it's apparent that the typical ISA millionaire doesn't take huge risks. The top 10 shares held by Hargreaves Lansdown millionaires are dominated by blue chip companies, including those that traditionally pay strong dividends, such as AstraZeneca and Aviva. You've also got companies like BP, GlaxoSmithKline, Unilever, and so on. So it's interesting to see the UK bias, and nothing like the tech giants in the S&P 500. Moving on to Interactive Investor's platform, we have a little bit more data here, but the mix of investments seems to be similar. First of all, the Interactive Investor's millionaires' average age is 74, compared with an average age of 57 for the overall ISA population. Interestingly, most of these ISA millionaires tend to be early birds, with 40% of the total money they put into their accounts for the entire year being added to their ISA right when the financial year starts. Okay, so in terms of how these millionaires invest, first of all, as you can see here, they tend to have higher than average weighting to investment trusts. These account for 42% of the average portfolio. This is followed by individual stocks with 39.9%, funds with 8.2%, cash 4.2%, and exchange traded products with 3.7%. Therefore, it's interesting to see that they have a relatively modest weighting to cash, which suggests that while cash plays an important role in portfolio diversification, their main focus is beating inflation through investing. Now, when it comes to the specific investments they have in their portfolios, here is the breakdown of products for the ISA millionaires as well as for the general ISA holders. Both groups certainly prefer UK blue chip companies that pay a dividend, accounting for 9 out of the top 10. The only outlier is investment trust Scottish Mortgage, which is the second most held investment among the ISA millionaires and fourth among the broader ISA population. So it's clear that the top holdings are dominated by FTSE 100 blue chip stocks, holdings that could help ISA millionaires in the race against inflation. Okay, next up we have AJ Bell. The number of investors with at least £1 million in their AJ Bell ISA has more than doubled over the past 3 years. Their average age is 72, but the youngest ISA millionaires on the platform is just 36 years old. The AJ Bell ISA millionaires have shown a preference for investing in individual shares rather than funds, with 75% of their portfolios sitting in stocks. Big blue chip names like Shell, Lloyds and GSK are the most popular stocks with AJ Bell customers who are an ISA millionaire. So again, we see those large cap dividend paying stocks from the UK market rather than overseas listed stocks which pay little or no income to shareholders. This trend explains why the average age of AJ Bell's ISA millionaires is 72, with many customers who may be in retirement and want their investments to generate an income. And when it comes to funds, they hold a few global funds, equity income funds as well, emerging markets and so on. It's pretty interesting to see that Fundsmith Equity is the top pick for ISA millionaires at AJ Bell, just like it is for investors at HL and Interactive Investor. What caught my eye when I was checking out these funds is that a lot of them are actively managed, which usually means that they come with higher costs. There don't seem to be any low-cost index funds in these millionaires' portfolios, which is quite surprising. Now, it's worth mentioning that investing in any of these funds or individual stocks won't be right for everyone. While it's inspiring to look at how the very wealthiest have got there, we need to think about our own situation, risk appetite levels, how long we plan to invest for, and so on. But what's the secret sauce to actually reaching millionaire status? Is it just the investments we make, or does our investing behavior play a role too? Well, luckily, 3 of the hundreds of ISA millionaires on the Hargreaves Lansdown platform have agreed to give away their secrets on how they build their wealth. But just before we move on, if you're enjoying this video so far, do me a huge favor and hit the subscribe button. It's much appreciated, thank you. One of the most common tips these millionaires give, which you hear time and time again, is to make sure you invest for the long term. Mr. F here says that you need to ignore the short-term noise and focus on the long term. Now, we hear this all the time, and it's not exactly the most exciting way to invest. And the idea of committing to an investment for 20 to 30 years or more might be scary, as its value will always rise and fall. However, as we all know, a lot can happen in the short term. So it's all about keeping your calm and remembering that over a long period of time, the market tends to rise. The key is to stay invested to benefit from that long-term growth. In fact, Mr. M here says that you should only invest in something that you would be happy to forget about for the next 10 years. This is certainly something we need to keep in mind, because if we plan to invest in the stock market for less than 5 to 10 years, or if we're investing money that we might need for something else, then we're doing it wrong. Just a note of warning though, that's not to say that you should hold on to a bad stock for the long run and you'll get great results. That's far from it. This is about sticking to our quality assets through thick and thin. The next tip is something that is really dependent on how much you can invest. But if you can, it helps to use your full ISA allowance. As Mr. M says here, he uses his full ISA allowance each year and puts the cash in at the start of every tax year. Now, whether or not you should invest the entire £20,000 in one go is really up to you. Statistically, lump sum investing tends to lead to better returns in the long term. But it's also riskier, because if the market were to fall significantly in the months months following your deposit, then you risk losing a larger chunk of money. Only on paper, of course, because you don't actually realize a loss if you don't sell. But psychologically, it could make you more vulnerable to selling your position when you see that so much of your hard-earned money is now dropping in value. Which is why drip feeding your ISA allowance across the entire year is the option preferred by many people, as you'll get to invest through ups and downs, and at the end of your journey, your position in the market will be averaged down. It's really a personal choice, but the point here is that if you can make use of your entire ISA allowance, then it makes sense to do so. The next tip this millionaire share is a very interesting one, and the mistake that many people make: overtrading. I would say that this is probably one of the most important tips, because overtrading, which means buying and selling investments too often, can be really costly, which in the end will reduce the total value of your portfolio. Mr. L here says, depending on the size of the share you buy, you can lose 0.5% every time you trade, meaning that if you trade that stock twice a year, that's 1% gone immediately. As I said in one of my previous videos, it can be really tempting to try and take advantage of short-term dips. But the reality is that being able to time the market is near impossible. That's why Mr. M adds to this and says not to worry too much about this and try not to trade too frequently. The problem with investing in today's day and age is that we are exposed to way too much information about the stock market. And you'd expect that by staying up to date and learning about everything that happens in the investment world will make you a better investor. But more often than not, that's just not the case. The truth is that you don't need to know 99% of the information and news about the stock market. All you have to know is that the stock market moves up and down for all kinds of reasons, and you shouldn't react every time that happens. I know this sounds really boring, and the reality is that long-term investing is indeed boring, but it works. So what this data highlights is that actually there isn't really a secret to getting rich. The main ingredient to all these people's success is really investing over the long term. The average age of our ISA millionaire is over 70, which means that they've often built their fortune through the reliable approach of getting rich slowly over the long term. The good news is that it's definitely easier to become an ISA millionaire today, with a generous £20,000 a year allowance. Admittedly, investing this kind of money is way beyond most people, so it would take much longer if you couldn't invest the full 20,000. For example, for someone investing £450 per month and earning an average annual return of 8%, it would take 35 years to reach £1 million. The takeaway is that becoming an ISA millionaire is certainly something that can be achieved with a bit of discipline and consistent investing for a long period of time. Now, the problem is that there are many things that many people don't actually tell you about stocks and shares ISAs. Things that can cost you a lot of money if you ignore them. So watch this video next to find out what they are and what you can do to ensure you don't lose money.